Good morning, you're watching World Business Report. I'm Karthik Malhotra. What's happening in the world, across the world of business, finance, policies and economy? All of this coming your way just now. Well, breaking news that came in last night and tremors, shockwaves literally in the world of cryptocurrency weeks after FTX's ill-famed CEO, if I can say, Sam Bankman-Fried was found guilty. Now we have Binance's CEO, Changjing Zhao. He's announced his intentions to plead guilty and step down, signaling an effort to bring finally some closure to the money laundering investigation by US authorities. This significant development is poised to reshape once again the landscape of crypto trading. Take a look.
The head of the world's largest cryptocurrency exchange has reached a plea deal with U.S. federal prosecutors that will cost him his job and $50 million. Changpeng Zhao, the CEO of Binance, will also plead guilty to breaking U.S. anti-money laundering laws, and the firm he founded will pay a $4 billion penalty. U.S. Attorney General Merrick Garland announced the plea deal on Tuesday.
Binance facilitated billions of dollars of unregulated cryptocurrency transactions. It willfully enabled hundreds of millions of dollars in transactions between American users and users subject to U.S. sanctions. And its platform accommodated criminals across the world who used Binance to move their stolen funds and other criminal proceeds.
Lawyers for Zhao and Binance, as well as a company spokesperson, did not respond to calls for comment. The development is the latest devastating blow to the crypto world since the conviction earlier this year of FTX founder Sam Bankman-Fried.
Binance became the largest cryptocurrency exchange in the world. Now, Binance is paying one of the largest corporate penalties in U.S. history.
Reuters reported last year that Binance has been under scrutiny from the U.S. Department of Justice since at least 2018. Tuesday's plea deal also resolves civil charges filed in March by the Commodities Futures Trading Commission. The CFTC accused the platform of failing to implement an effective anti-money laundering program to detect and prevent terrorist financing. The regulator wrote that in February 2019, Binance's former chief compliance officer received information on transactions by the militant Palestinian faction Hamas. Zhou, a billionaire who was born in China and moved to Canada at the age of 12, said the CFTC's complaint, quote, appears to contain an incomplete recitation of the facts, and we do not agree with the characterization of many of the issues alleged.
Well, charges of money laundering there and the fears of cryptocurrency really being responsible for terror funding coming to light after all. Well, let's move from the world of cryptocurrencies to the capital market. After a remarkable streak, a 5-day winning streak, both S&P 500 and the Nasdaq faced a bit of a downturn, ending their 5-session winning streak, and this amid market fluctuations. Take a look.
Wall Street's main indexes ended lower on Tuesday, with the S&P 500 and Nasdaq snapping 5-session winning streaks after disappointing outlooks from retailers weighed on stocks. The Dow and S&P 500 each shed about 0.2%, while the Nasdaq shed 0.6. Minutes from the latest Federal Reserve meeting showed officials taking a cautious approach on interest rates, saying they would raise them only if inflation did not continue to tick down. But Scott Ladner, chief investment officer at Horizon Investments, says the central bank should consider lowering rates as soon as April of 2024.
When the Fed says higher for longer, they're talking about keeping rates at this, these kind of 5 to 5.5% levels for pretty much all of next year. We think that is very unlikely because, we do see inflation coming down pretty quickly, pretty predictably, frankly. And as inflation comes down, the Fed maintaining rates where they are is actually becoming more restrictive through time. This is not a Fed that needs to become more restrictive if they're winning on the inflation battle, and they're seeing an economy which is starting to slow a little bit, which it is.
In company news, shares of Nvidia slipped from an all-time high on Tuesday and fell further in after-hours trading following the chipmaker's quarterly results. Nvidia forecast quarterly revenue above Wall Street's estimates, but also warned that sales to China and the Middle East would slow due to export controls. In retail news, shares of Kohl's shed more than 8.5% after the department store chain missed third-quarter sales estimates, and Best Buy also dipped after flagging weakening consumer demand heading into the holiday season.
Well, Wall Street there, red all the way, but that's not all that's red. The OpenAI saga now takes yet another twist. Investors in OpenAI are now contemplating legal action against the board following the dismissal of former CEO and co-founder Sam Altman, as well as the other co-founder Greg Brockman, sparking concerns now and the potential upheaval within the company. Take a look.
Some investors in ChatGPT maker OpenAI are looking into whether they can sue the company's board after last week's surprise ouster of CEO Sam Altman. That's according to sources familiar with the matter who told Reuters exclusively that the investors are working with legal advisors to study their options. Altman's abrupt firing by the board of directors has triggered the threat of a mass exodus of OpenAI employees. Investors worry that they could lose hundreds of millions of dollars they invested in OpenAI, with the potential collapse of the hottest startup in the rapidly growing generative artificial intelligence sector. OpenAI did not respond to a request for comment. The board fired Altman on Friday after what an internal memo called a breakdown of communications. By Monday, most of OpenAI's more than 700 employees threatened to resign unless the company replaced the board. Reuters spoke with legal experts who said the structure of OpenAI would make it hard for investors to win a lawsuit against the board. Because OpenAI is controlled by a nonprofit parent company, experts said that gives the board a lot of leeway when it comes to leadership decisions. Also, OpenAI used a limited liability company as its operating arm, which makes it even harder to sue directors, according to one expert.
All right, legal trouble there for OpenAI, but Silicon Valley seems to be engulfed with legal troubles. A legal battle now brews as Elon Musk of X files a lawsuit against Media Matters over, of course, the anti-Semitic allegations relating to Nazi ad claims, igniting now a contentious dispute between Media Matters and X. Take a look.
Social network X is suing watchdog group Media Matters over claims that ads for major brands appeared next to content touting Adolf Hitler and the Nazi Party. Elon Musk's firm says the report defamed it and was based on manipulation. In a Texas lawsuit, X says Media Matters resorted to endless scrolling and refreshing until it found ads next to extremist posts. The company says that misrepresented the typical user experience with the intention of harming X and its business. Texas Attorney General Ken Paxton has also opened a probe, saying he was extremely troubled by allegations that Media Matters manipulated data.
We're at a really critical moment right now.
In an emailed statement, Media Matters President Angelo Carusone called the lawsuit frivolous and said it was meant to bully X's critics into silence. The watchdog group is widely seen as liberal-leaning, and its allegations have added to the financial challenges for X. Major advertisers, including IBM and Comcast, have pulled marketing on the platform following the report. That comes after a previous exodus of advertisers following Musk's purchase last year of the network then known as Twitter. Reuters has previously reported that ad revenue at X has been down at least 55% on the year every month since the takeover. Many firms have been wary of Musk's contentious posts. Those concerns flared anew this week after the billionaire was accused of endorsing an anti-Semitic conspiracy theory posted on X.
All right, ad revenues there posing to be a major challenge for X, formerly known as Twitter. But on the other side of the world, in China, Baidu surpasses expectations with a surge in ad spending, marking a fairly impressive performance that exceeded all forecasts. Take a look.
China's top search engine is doing better than expected, and that might be a good sign for the country's economy. Baidu said Tuesday that third quarter revenue came in at just over $4.7 billion. That was just ahead of analyst estimates. The company benefited as ad spending rose amid signs of a wider upturn. China's economy is set to expand 5.4% this year, according to forecasts from the International Monetary Fund this month. That's an increase on its earlier forecast, encouraging companies to spend more on marketing. Baidu also beat forecasts on profit. The company is among one of many in China engaged in a fierce war to win the local market for AI services. Boss Robin Li said earlier this month that the country risked duplication of effort and a huge waste of resources as a result. He urged firms to focus on developing practical applications for the technology. Baidu's own bot, dubbed Ernie, was open to public use in August. An updated version was then unveiled last month.
Well, ad revenue shoring up for Baidu in China, but it's not just artificial intelligence and big tech that is bullish on China. It's also the good old cheeseburger. McDonald's sets its sights on China's growth, tapping into the burgeoning market as it aims for expansion and a bigger bite into the Chinese market to further its establishment in the region. Take a look.
McDonald's has got a taste for growth in China. The US fast food giant says it has struck a deal to ramp up its stake in its Chinese business to 48%. The deal sees McDonald's buy out a 28% stake held by Carlyle Investment Group. The move is in sharp contrast to other multinational corporations. Many have pulled back investments in China or even left the market altogether due to geopolitical and economic worries. But McDonald's chief executive Chris Kempczinski said Monday that he believed there was no better time to capture higher demand in what he called its fastest growing market. Financial terms were not disclosed, but two sources said the deal values the China unit at around $6 billion. That's far more than its valuation in 2017, when McDonald's agreed to sell 80% of the business for up to $2.1 billion. Since then, the number of McDonald's stores in China has doubled to 5,500, and the country has become its second largest market. It aims to have more than 10,000 stores there within the next few years. McDonald's further said the business has generated sales growth of more than 30% since September 2019. A consortium led by state-supported conglomerate CITIC still has controlling ownership of the China business with a 52% stake.
All right, 10,000 McDonald's stores dotting China soon, but all's not well really in neighborhood Taiwan. Foxconn's electric car unit faces a setback in its market debut, experiencing a decline that now poses a challenge amid fairly high expectations for Foxconn's entry into the automotive industry. Take a look.
Foxconn's electric vehicle technology unit, dubbed Foxtron, made a stuttering start on its market debut on Monday. Unfortunately for the Taiwan-based company, investors showed their concerns about the EV market. Foxtron shares were off as much as 9% at one point, though they rallied to end 2.7 down. One analyst warned the EV market has been flooded by price cuts from major players like Tesla. Electric car makers are also dealing with a wide range of headwinds. Inflation and high interest rates have made such vehicles more expensive to buy, while supply chain bottlenecks and pricing pressures persist. Foxtron is a joint venture between Foxconn and a local car maker, Yulon, whose Luxgen brand is so far its only client. But Foxtron Chair Yong Liu said the company has a clear strategy for growth, and he said the firm has ambitions to move into North American and Southeast Asian mainstream markets. The company raised $235 million in its initial public offering.
All right, all's not well there at Foxconn's new EV business. But back in the US, holiday season is around the corner. Retail stocks take a hit as gloomy holiday forecasts cast a shadow over the sector, signaling potential challenges ahead for the retail landscape. Take a look.
Shares of several major retailers tumbled on Tuesday thanks to tepid holiday forecasts from Best Buy, Kohl's, and Lowe's. Just days ahead of the Black Friday shopping rush, Best Buy cut its annual comparable sales forecast, calling consumer demand, quote, difficult to predict. Shares of the consumer electronics chain, down nearly 15% this year, dipped further in Tuesday afternoon trading. Kohl's also lowered its annual sales forecast and said it would aggressively discount prices during the crucial holiday season, sending its shares down as much as 11%. And Lowe's on Tuesday projected a bigger drop in annual same-store sales than previously expected, as inflation-weary consumers cut spending on home improvement projects, hitting the company's key do-it-yourself business segment. Shares dropped more than 2.5%. Bucking the trend of trimmed outlooks was Abercrombie & Fitch and American Eagle, with both forecasting holiday sales above analysts' expectations. But even they couldn't escape the sector's gravitational pull, with shares of Abercrombie sliding 3.5% and American Eagle nosediving more than 16%.
Well, a retail slump there likely in the US and Deliveroo in the UK. The Deliveroo Riders are encountering a setback as trade union has issues creating a hurdle, impacting the gig economy and sparking discussions on workers' rights. Take a look.
Deliveroo riders in the UK cannot be represented by a trade union for the purposes of collective bargaining. That was the judgment from the Supreme Court on Tuesday. The Independent Workers' Union of Great Britain, or IWGB, had tried to represent a group of Deliveroo riders to negotiate pay and conditions with the company. The union was first refused permission 6 years ago on the basis riders were not workers under UK labour law. The IWGB later took its case to the UK's highest court in April. It argued it was an unlawful interference with riders' human rights to deny their application to be recognised by Deliveroo for collective bargaining. But in a unanimous decision, the Supreme Court said Tuesday Deliveroo riders do not have an employment relationship with Deliveroo and were therefore not entitled to compulsory collective bargaining. The Supreme Court said in its written ruling that Deliveroo riders could appoint a substitute to undertake a delivery. It also said they can work for competitors, do not have to work specific hours, or even carry out deliveries at all. The court decreed these features of the relationship between Deliveroo and its riders were fundamentally inconsistent with any notion of an employment relationship. The IWGB called the ruling disappointing and said it was considering its options. A Deliveroo spokesperson said the decision was a positive judgment for riders, who they said value the flexibility self-employed work offers.
Well, definitely a setback there for delivery workers and gig economy workers in the UK. But then there's also competition for the popular UK Scotch, the Scottish Scotland Scotch, because celebrating a centenary milestone, Japanese whiskey sees a surge in popularity, marking 100 years since its inception and continuing to captivate enthusiasts across the world. Take a look.
Special wood to stoke special fire in the hopes of crafting a special whiskey. Shizuoka Distillery claims it's the only whiskey still in the world heated with a wood fire underneath, using fragrant Japanese cedar, often used in aromatherapy and the country's onsen baths. It's a distinction they hope sets them apart from a groundswell of independent craft whiskey makers in Japan and a global frenzy to buy their bottles. Shizuoka founder Taiko Nakamura was inspired to tap into the industry in 2016 after a trip to Scotland.
When I saw an actual distillery for the first time, I was impressed by how amazing it was. I could see that this small distillery in the mountainous countryside was selling whiskey globally, and I thought that I would also like to make my own whiskey and sell it around the world.
It wasn't always like this. 2023 marks a century since today's leading distillery, Yamazaki, was opened by Japan beverage giant Suntory. It had long been seen as an inferior copy of Scotch. Then in the 2000s, Japanese labels began to sweep whiskey awards, and a scramble to snap up bottles eventually drank the supply of Japanese whiskey dry around 2015. That shortage has sent prices skyrocketing. It has also seen new entries to the arena, like Shizuoka. They are one of more than 100 licensed distilleries the country has, a number that has doubled in a decade. and they appeared to be transforming the industry. On a recent night in Tokyo, Ba Shinkai had a wide range of brands on the shelf. Hiroyuki Shinkai, who runs 3 of the bar's locations, says nowadays he sees people looking beyond the big players.
Everyone knows the major whiskey brands like Suntory and Nikka, and of course there are a lot of customers drinking them. But we're making a big effort to offer a large selection of whiskeys from craft distilleries, like Chichibu, Akeshi, Shizuoka, Kanosuke, and others, those that started around 2016.
Meanwhile, Suntory has poured $67 million into upgrading its distilleries, including its Yamazaki site. Chief blender Shinji Fukuyo told Reuters he welcomes the new breed of Japanese distillers, and that Suntory is willing to give advice to the startups, quote, as long as it contributes to maintaining and improving the quality of Japanese whiskey as a whole.
Well, from the world of Japanese whiskey to the world of rock and roll, a chair, a physical chair linked to Elvis Presley's secret vacation surfaces for sale, offering fans a rare glimpse into the legendary singer's personal history. Let's take a look.
Turn it a little bit, shift it.
Sure. That's good right there.
This chair is from Elvis's secret vacation from 1959, a mere 2 weeks before he met Priscilla Presley. It was said that he ended up meeting a young Rosemary Pratt when she was 18 years old. So they would go to this beer garden a lot. Elvis would always sit in this same chair. So at the end of the 2 weeks, he ended up actually signing this chair. I think with the chair, conservatively, 5,000, but I think it could go all the way up to 50. I mean, really, it's a big jump, but it's the story. It's the time of his life and, you know, just the things that go along with it that the seller's going to be able to kind of pass on to that buyer.
All right, well, the mummy's return, quite literally archaeological discovery unfolds as 5 mummies dating back a millennium are unearthed in Peru, shedding light on ancient civilizations as well as their burial rituals. Let's take a look.
Nosotros ahorita nos encontramos en un templo pre-inca, ¿no? De 3.500 años de antigüedad.
We are now in a 3,500-year-old pre-Inca temple. We have found 5 mummies. 4 are apparently children, of whom 3 are covered with textiles, and the other 2 are skeletons. These are 1,000 years old and belong to the Ixma culture.
Que pertenecen a la cultura Ixma. Nosotros han tenido bastante peso encima.
Well, when you find those mummies, you definitely can't say let it go. But Disney enchants Hong Kong as World of Frozen debuts, offering a magical experience to fans of the beloved franchisee of Anna and Elsa in a new and enchanting setting. Take a look.
Welcome to the Kingdom of Arendelle.
The Frozen franchise will turn 10 years old in just a couple of days, I believe. And Hong Kong Disneyland is the first place that it's coming to life as boldly and ambitiously as you're all seeing around us today. That makes me very, very proud. I hope it makes the people of Hong Kong very proud. I know that our fans are going to love this.
Well, I'm from Los Angeles. I flew out here for the opening of Arendelle because to me this is like the most important thing I could possibly come to. Like, it's 10 years celebrating Frozen, and the last 10 years have been like amazing because the story of Frozen has changed my life.
Well, visuals of Disneyland, Hong Kong there, all dotted with Anna, Elsa and the world of Frozen. Well, news continues right here on News 9 Live, but that's all we have on World Business Report. See you again tomorrow. Thanks for watching.